I think that suggests that the Chinese look at Trump's position and see that he has a weaker hand, maybe not just economically, but more importantly, politically. I think people try to assume that Trump is playing three-dimensional chess a little bit more than he probably is. Most of what President Trump is doing is intended to benefit himself politically and set himself up for a 2020 re-election. I think the Chinese realize this and see his move to delay tariffs as a clear sign that the trade war is starting to weigh on his re-election chances, and that weakens his position.
Cesar, of course, the markets and investors pay very close attention to any tweet that comes out, any headline with trade in China. Today we are higher, but it has been a very wild and rough week if you're bullish for the U.S. stock market. What do you think investors need to be prepared for when it comes to China's potential retaliation?
Citi's view is that there could be some unconventional measures that could be taken, either a reduction in holdings of treasuries, either a further depreciation of the renminbi, or perhaps a potential ban of exports of rare earth materials. But to the extent that we continue to see a continued and protracted trade war between the U.S. and China, our view is that investors need to prepare for continued and persistent uncertainty.
That seems to make a lot of sense. Can I circle back and talk for just a quick second about President Trump and his criticism continuing of the Fed, of Fed Chairman Powell? Of course, he wants us to cut rates further. What do you make of all of that? And what do you make of sort of the positioning of the Fed? They continue to cut rates, or at least they did, which is what Trump wanted. He wants more. If they cut again, is that a dangerous position for them to be in?
So what we have been highlighting is that the U.S. financial and economic conditions basically allow for a more aggressive trade stance. Why is this? Because we still have robust growth, we still have relatively high equity markets, and we have now prospects of lower interest rates. And two of the drivers that were behind the rate cut by the Federal Reserve were lower growth prospects and also higher trade policy uncertainty. And after the Fed cut, these became worse off. So to that extent, there is prospects for additional dovishness by the Federal Reserve and other central banks. And that's why we are still expecting that will reinforce the aggressive stance by the U.S. administration on trade.
You know, Clayton, here we go, going into a weekend. Again, there's been a lot of uncertainty this week. What is your expectation for the commentary between the two countries, between the U.S. and China, and what would you suggest all of us brace for?
Well, I think the first expectation would be that you're likely to see Trump continue to push forward this message of China wants a deal. It's because of the pressure I've put on them. They're willing to, meet my demands. All of that is a way for him to sort of reassure his base, reassure his political supporters that this is all going to work out well for them. I think that continues. I think we would continue to see, or we still won't see really any strong confirmation of continued talks or potential changes in the Chinese position. I think the Chinese at this point are kind of waiting and seeing. Where do we go from here? Does Trump renew the temporary general license on Huawei ahead of the 19th? Do we actually follow through with List 4A? And the Chinese are going to hold back from a sort of a detailed response until they get those things sort of in hand.